Take a victory lap, because if you buy a stock if you miss the move from 100 to 300 and then it pulls back to 250, but you told us at 300, start to ease out of it. You've been 100% right. You're still not going back, right?
No, I'm not going back. I still think right now, looking at risk reward and valuations, I still prefer your smaller caps to your mega caps. And I'm looking at more valuation plays, like the best of the breed, but within a fair value. And some of them being industrials, banks, and materials.
So when I think industrials, banks, and materials, right now in this environment, it feels like a safe haven.
Yes.
But you're saying once we get past all of this, we want to be longer term. Like this time, this is going to be a real legitimate move in these names, not just a place to hang out until the dust settles.
Yeah, I don't see the outperformance and growth coming back anytime soon. I think we just have, like you've been talking with a lot of your guests, there's a lot of worries about the economy. There are a lot of headwinds with where we're going to go for the next year, whether it's a soft landing or a recession. And so I think that being in more of a safe area and just coming in at lower valuations, stocks that aren't priced for perfection, because I think perfection is going to be really hard to achieve over the next 6 months.
And small caps, you like them as well here?
I do, and mostly because of valuation. But if we do see if the Fed starts speeding up on cuts, obviously that could be a boost for those as well.
So you're not neutral on AI, though. I mean, do you think the AI story, for the most part, the boom part of it is over? Yes,
I do. And I would actually say that we've just seen consistently that companies that were part of that AI story, it's becoming, a lot more expensive than they originally thought to get going. I think that story is going to continue for quite some time, even if we're just not talking about the momentum trade. I think realizing those expectations about profits is going to be difficult. So I'm holding off on
Holding off, okay. I saw in your note you like Europe.
Yes.
Okay, so Europe is doing well. If you just look at Europe by itself, the chart, we're going to put up a chart here. It's made a really nice move. This is an IEV, but there's all kinds of ways you can measure Europe. But it's made a heck of a move. But if you look at Europe vis-a-vis the S&P, it's like, look, it's in the dirt.
Absolutely.
So does this tell you then it's got more room to the upside? Ignore the first chart, pay more attention to this chart.
And look, and even if you go farther back, Europe has underperformed the U.S. for years. I think it's even a decade. I'm saying over the next 6 months, we've just got a lot of headwinds in the U.S. Europe has already gotten past them. They've already done one cut. They're just so cheap right now. There's just less downside, and there are specific companies that are doing particularly well. One of them I like is Maersk, shipping transports, a Danish company, so not even the Eurozone. But I think when you're just looking at the risk-reward analysis over, let's say, the next 3 months, I think that Europe has just more opportunity to keep going up versus the U.S. that's just so dominated by these heavy tech stocks and just a lot of vulnerability.
You also like sovereign bonds and the 2-year.
Yes. So short-term U.S. government bonds, I think those are one of your places. I know the 10-year's been moving on. It's been in the headlines. So I don't want to talk about that. But another just safety play, we're just seeing a lot of risk-off types of trades. And this is why, with the exception of the small caps, I'm talking about value stocks within the U.S., Europe stocks, best of breed companies, though. I'm not talking about just like a straight up sector rotation.
In this case, though, risk reward is really important to you. It feels like that's the paramount thing you're looking for first.
Because if things are going to go south, if things are going to go south, I want those stable companies. I want the companies that are still going to perform, even if the economy isn't going to do so well over the next 6 months. So if we face some rocky points, I want to be in those safety stocks.
If we do face rocky points, at least in the near term, it's going to come from the economy and the jobs, and the Federal Reserve.
Absolutely.
How confident are you that the Fed will be able to navigate us through all of this?
That's a tough one. So they've never been able to achieve it ever, right? There's always been some.
The triple Lindsay, right?
Right. Yeah. I would say I think we're probably just going to see a short-term recession. But it certainly that can weigh on consumers, weigh on how we spend, and obviously not only what the Fed does, but how the election turns out can just change how people feel. And so I think we just have a lot of big unknowns coming ahead in the next 6 months.
The good thing is, though, you gave the audience, some good marching orders to get them through these rocky waters.
Yeah, there are a lot of options.
Yeah. Thank you so much,
You're
Erin.
welcome.
Really.